Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking about the active news cycle that involves the Philadelphia Fed. That was the big number today. We thought retail sales might be the big number, and right now it looks like it's the Philadelphia Fed. So we're going to go ahead, dive into those numbers. Really a choppy, ugly day on Wall Street. If you're trying to pick a direction in the U.S. indices, you've probably gotten slaughtered. The big story right now is we've got a pending breakout coming on your gold market above last month's high. We're watching it relatively closely. As far as what else can we really do today, well, we could dive into the news. We can game plan for tomorrow. Been a challenging week. I thought it was going to be a heck of a lot easier than it's been, but it's been a challenge. CPI number really shook the markets up, and today you're just seeing textbook example of everybody putting the brakes on and waiting and reevaluating and all those things. So let me see. What do we got? We got Mark Corp. Good to see you, Mark Lita. Always a pleasure. JC, hey, Shane. The Euro AUD got in at the 5 crossover going down, but it went flat. Yeah, I mean, this is kind of timing. Hustle Horns. Hey, bro, good time. Good to see you. Hurst Horns. Team Marine. Always a pleasure, guys. All right, let's get this out of the way. If you guys need a broker, check out Switch. It's a pretty good place to design trades, build anything you want on a CFD or a forex pair, and even some crypto pairs as well. But let's get to the task at hand, and that's going to be this dollar yen. Now we just put out a trade idea not too long ago on the dollar yen. We're already long. We're up a few pips here, but we're already long, and I'm sort of going to show you a little bit about how I would trade the dollar yen on the futures market. So right now you've got 154.96 as your key level. We bought 155 and a quarters. I think we're going to trade up from here. All of this rally on the Japanese yen has come on the back of all that scuttlebutt we heard the other day about the BOJ hiking rates next week. So the yen is in play. We thought it was in play. We just missed the guppy short. That was frustrating. We missed that by about 10 pips. But here we've got a trade that I wanted to be aggressive with this one. So we put in the quarter buy, even though we're not even really down to our support zone yet. And as far as me trading this is sort of what I'm looking at. I'm looking at Euro FX. Japanese yen FX futures. This is a contract that I have a little bit of experience with, and I want to short from right up there. Full disclosure, I'm watching it relatively closely. I'm looking to get short this market. I took a shot at a short earlier today, and it wasn't the greatest thing that I've ever done, and I'm a bit frustrated because I took the short from right down in here, sort of betting this 30-minute candle's the top of the day. It is the top of the day. I would be very surprised if this market rotates higher than that significantly. But if, in fact, it does, then we'll have our longer-term sell up here. So right now I'm looking for trade location and entry. My first trade location was sort of right in this order block here to the short, put my back against the top. Once symmetry was broken, I ended up taking a loss there. It wasn't a very big loss. I think we're down. We're stuck a little bit for today. Not really that big of a deal. I'm not too worried about it, but I want to make sure that I get this short. So in order to put the trade idea out, I had to put it out sort of in advance, and I did it in this market right here, which was your dollar yen pair. This bid, it's live. We're up at just a few pips. I'm waiting for this to sort of fizzle out and give us an opportunity maybe to get maybe add to this position and get long. I really like that 38%. I'd be surprised if we lose it, but it can happen. So be sure that you check out the trade idea. That went out earlier today in the analytics thread. And remember, if you just go to the top of your screen inside of the trading room, click on me and follow me. Those get delivered right to your inbox every day. So you're definitely going to want to check that out. I'm watching the Japanese yen very closely because I do believe that we can make a little bit of money there. I really do. I think we can make a little bit of money there. Let's see. Let me see. I scalped the NASDAQ down to the ones. Laugh out loud. EMA system. Yeah, I mean, the 1 minute chart on the NASDAQ can really work for you. I don't know how the EMAs did on the indices today. I think it was pretty ugly. They went sideways. I've sort of been just my immediate market reads. The two things trending today are gold. Got a nice gold long that actually paired today's losses a little bit. And then I've been looking at WTI crude. Just haven't been able to pull the trigger really on much for crude oil. So let me see. Hurst Horns. I've never traded Forex. Hurst, I love to find other traders using EMAs and seeing how they read price action. Hope you're doing well. Yeah, I'm doing all right. Not doing too bad. The EMA stuff, I didn't have any plan for today, but we could definitely look at a few. In any case, that was the trade for today. I'm watching that support zone right around 155. I think it's going to be a big deal. As for what I think about the Japanese yen right now for the rest of the day, boy, it's tough. It's tough sledding out there. I'm not necessarily sure. We could certainly pull up an EMA. We could pull up my 9 EMA strategy here and see exactly where we're at. Let's just go ahead and throw the 9 EMA with RSI on this Japanese yen trade. You can see we got this is the 920 crossover strategy we did yesterday, right there. There would be your your oversold territory. That would have been your buy. So right there, you'd be long this market. I don't disagree. This is Euro USD. That's a great trade. But as far as the dollar yen goes, what could we say? Well, we're in oversold territory, so we're looking for that crossover on the 4-hour to buy. I mean, I'm really looking for an excuse to buy. We already bought. We already bought. Let's go down to a 30-minute and take a look at the 30-minute chart. 30-minute, nothing really. We were in oversold territory there. Did we get a crossover right there and get stopped? God, that's close. Yep, right there's the crossover. So you'd have been long right there because you were oversold. You would have been long, stopped yourself out right there and taken a loss right around 155.61. And guess what? It would have been a good stop out point. It would have been a damn good stop out point. That would have got you out of trouble. We've traded south by another 40 pips. Dollar yen's trending. And right here, if you want to get back on over to the futures, I mean, we're going right up next to the top of the day. I kind of want to sell from up here. Should we pull the trigger or not? We've got sort of broken symmetry. I do like the idea of potentially locking in a stop loss right above that high. The real question is what's happening on like the 5-minute chart. You can see right here, nothing really. Nothing. Got a nice sell right there that gave me a little bit, but I didn't take the money, let it ride, and we ended up getting stopped out right above this candle here. But right now, we're sort of, it looks to me like we're going to run at that top. I'm not necessarily certain that we get any love up there. It wouldn't shock me at all to see this market really trade off on Friday, and that's sort of what we're banking on. Remember, I know the prices are different here. Futures, Japanese yen FX futures is going to be the inverse of what we see on our dollar yen. So your dollar yen, you're going to see right there. What do you got? You've got big round numbers, 154. This is just the inverse of that. It's going to be the number of dollars per yen instead of the number of yen per dollars. So always remember that. That's a key point when you're trading FX futures. So I'm watching that closely. I think we're going to run at the top, but I expect the damage to be about over, to be honest with you. As far as the biggest story today, and I don't think there's any question about it, it's going to be gold. Now, your gold is what? What are we in? We're in that monthly bullish pennant that I pointed out yesterday. The breakout is very close to being on. The real question is when exactly are we going to be able to say, okay, let's buy it? Well, we're getting there. Right there's your monthly high. That's December's high at 27.26.18. We're getting into breakout country here. Now, do I believe that we're going to break and just run up to new all-time highs? I don't believe that. I think you're seeing a lot of folks manage their safe haven exposure, pile into safe havens ahead of Inauguration Day. That's going to be the big story for Monday. Remember, holiday session, Martin Luther King Jr. Day. You're going to see a situation where you're having Inauguration Day on MLK's birthday. A lot of people. There was just a terror cell with a weapons cache discovered in Chicago. The nation is on high alert for Inauguration Day. We expect civil unrest. Well, I don't necessarily know that we expect terrorism, but you can definitely see that a lot of people are on edge. And thus far this month, you're up about 3.75% on gold. But take a look at today's action. Today's action's significant. We sort of broke out of that sort of this daily little pyramid that we had. We broke, and the action's been significant. Keep a close eye on last month's top. Absolutely huge. So if I'm going to go ahead and I'm going to trade gold right now, the way it lays, I'm going down to a 4-hour chart, and I'm going to have a look at the price action. And right here, what do you got? Spike low, spike high, something like this. 27.11.44. Interesting. If we get a pullback there, we'll have an opportunity potentially to get long. I like it. I want to be long here, but gold's tough. We're in rotation. There's no question about it. We're in rotation. Let me see right there. Brian Barbie, good to see you. Let me see. Hurst Horn, sorry for spamming your chat. Don't worry about it. Have you ever studied? No, I haven't. I haven't really studied it. Have you studied how Steve Morrow and Tino from Traders Reality use EMAs in a cyclical sense? Nah, I don't. I haven't. I've heard Morrow. That's the smart money guy, I think. But I don't know. 5.13.50. 13 EMA is big. You need to pay attention to that. That's my weapon of choice. But as far as the rest of it, I don't know anything about it. Could get wild. We do have a lot of bad actors here. Hopefully it goes smooth. I mean, that's the absolute truth, Hurst. I don't know what's going to happen. I do know that we're in an interesting situation. So if I was looking at the gold futures market today, and I was, you can see that we are just in sort of an uptrend. We're breaking high. We're above our daily range is this level right here. hugely important. That's last month's high on the futures market. You see it right up there. You're going to want to be aware of what happens up there near that high. That's very, very important, especially if you're interested in trading gold right now. So bullish, bullish, bullish. I think the breakout's coming any time, and a lot of folks are piling into gold right now to manage their downside risk towards any sort of terrorism event on Inauguration Day. No question about it. No question about it. All right, guys, we got a few things to cover here today. Let me see. Got another question. T. Marina, hey, Shane, your suggestion and insight to diversify a new swing trader's account with futures or options to maybe less drawdown. Yeah, I mean, I like trading everything except options. I'm a rube in options. I don't know much about options. I know how to use them to take positions in the market, and that essentially is buying calls or puts and just paying the premium. As far as straddles and strangles and all those different strategies, I've studied them all. I've written about them all. I just don't really put any to work because it takes a lot of money to play like a spread or a strangle or a scramble, a strangle or a I can't remember the other one. In any case, it takes a lot of money to play options unless you're taking these huge risks, and most of those lose with the real short expiration dates. Most of them lose. So this right here, I stick with futures mostly and trade some Forex pairs, but you can trade futures that reflect the Forex trades. You just have to find the right instruments. So if I was going to diversify, I would be trading uncorrelated assets. So I'd be trading like a U.S. index. I'd be trading some commodities, and then I would be trading some Forex pairs, some U.S. dollar pairs, some major pairs, but also some crosses and some exotics. Exotics are tough because the spreads are huge, but you can make a little bit of money doing it if you know where to bet, and you can get an actual decent entry points. Be very careful with exotics, though. A lot of slippage, big spreads. All right, today was a big news day. We had retail sales, and that was going to be the headliner, and it wasn't. Remember, Tuesday, Wednesday, Thursday, psychology. We are sort of looking at getting active. I've been sort of on my hands today. It hasn't really been that great of a day. Only a couple trades, and like I said, I've been trading to the negative today. I'm not real big on that. I would much rather trade to the positive, but sometimes you get hit, and sometimes you take draws. All right, news of the day, continuing jobless claims. That one came in. I just don't see much that's big there. Core retail sales, exported price index, initial jobless claims came in. That's the one we want. 217,000 over 210,000 and 203. So that's sort of an uptick in unemployment. And then the big number for me was the Philadelphia Fed Manufacturing Index. That's just sort of a look at business conditions in that tri-state area. And 44.3, well over expectations at -5. That's a blockbuster number, so I'm watching that relatively closely. It suggests that we have a little bit of economic activity from the manufacturing sector, maybe a little more investiture in anticipation of the new administration. I don't know. We got to wait and see. But I know interest rates are relatively high relative to the last 10 years. And I'm surprised to see manufacturing kick up. Now, what else do we have here? Retail sales. That was one of the titles of this stream. Retail control. I have no idea what that is. Retail control. Retail sales right there, 3.92%. There it is month over month for Dees, 0.4%. That was beneath expectations of 0.6, and it was also beneath the previous release of 0.8. Not a real good retail sales figure. However, still positive. So you're still growing. There's still action in retail. A lot's been made about the debt levels here in the United States. Eventually, that's going to bite into retail. The real question is when, how, and what's sort of the breadth and the depth of that situation. Nobody knows. All right, Philly Fed, this is really what I want to target. You can see this chart over the last year. That by far was the best reading we've seen in a very long time. And right from the horse's mouth here, the Federal Reserve Bank of Philadelphia, the Philadelphia Fed Manufacturing Index climbed to 44.3 in January 2025, its highest since April of 2021 from a revised reading of -10.9. So the highest reading in many years, 3 years? April of 2021. This is a good sign from the Philly Fed. What has it done to the markets today? Nothing. Absolutely nothing. I mean, a few traders have sort of bid it. I saw some economists running their mouth about how great of a number it was, but realistically, this is what we're looking at for the US 30 CFD. Something like this, just ugly. I call that just bowling shoe ugly right there. That is ugly right there. You've got a nice opening, really a just chop city on the opening 30 minutes, and then we just sort of trade it down and we rotate it up. Nothing's happening here. Nothing's happening here in your U.S. equities. There's been very little action to speak of directionally. I would say that right now you probably are better off sitting on your hands or waiting for a late day move. So we had a question about the NASDAQ, E-mini NASDAQ futures. That's gross. That's really bad. that screams of absolute compression. So the real question is, are we going to open up the throttle towards the end of the session here in power hour coming in about, an hour, 45 minutes? Are we going to get a move, or are we going to sit here and just sort of go, well, we're going sideways. That's fantastic. Something like this. You can't use Fibonacci's on things like this. Can't do it. Doesn't work. So something like that, I'm like, that's not real great. What could we do maybe with our moving averages? Do we have our moving average chart somewhere? Let's go ahead and pull it up, see what we've got on a 9 EMA. 9 EMA RSI. Let's go ahead and pull that one up. Let's take a look at the E-mini NASDAQ. E-mini NASDAQ futures NQ. 30-minute chart. We were sort of in overbought territory there right around during that U.S. overnight. No surprise after CPI that we got that big run during the after hours, and then you sort of saw the sell-off back into that big rally. For me right now, if you go to a 5-minute chart, which is still very, very large to play on your NQ contract, let's go to a 1 minute. This is the 920 crossover. It's just flatline, guys. And I will tell you this from experience. When you see the 1 minute chart for the NASDAQ inside a 70 and 30 on that RSI for a long period of time, it means that it's dead as disco. It's flat. So I would be very careful trading this thing. We're starting to get a move right now. You'll notice we had a trade a little bit earlier today. Your low right there, 9:42 a.m. my time, 11:42 a.m. Eastern. You were in oversold territory, and the buy would have been right there. Right there. That would have been the bid, and it paid you off pretty well. So, right now I would be steering clear of moving average trading. I would be looking more along the lines of what has this market done today and what are the extremes. We're putting out a video tomorrow. It's called the Orb, the opening range breakout strategy. And I want, if you guys want to watch it, great. If you don't, that's fine too. But what it does is it really shows you how to build an opening range with 2 candlesticks and sort of have an idea of what's going to happen in the market. Now, right now, our 30-minute chart gives us a good look at what's happened in the market today. Right there, opening bell, ding, ding. That's your opening hour range. Right there, sell-off, bounce, and then we took it out a little bit and then rotated back up into the market. So for me, I would be watching intraday lows relatively closely. I would be watching them relatively closely. And the reason why I would be doing that is because I think that potentially you could get a late day break in a runner. I'm not bullish or bearish at all in either way today, though. You could run into trouble trying to play a breakout beneath that. If you're going to do it, you probably want it to line up either with your EMA trading strategies or potentially throw a Fibonacci on there that'll get you sort of short or with the breakout if it turns into a long side breakout with a little bit better trade location. You have to be very careful trading around the edges of the range today, because if you do get into trouble, it's just gonna chop you to death, and you don't want to do that. Just sort of showing full disclosure. This would be that's not it. This would be what the E-mini NASDAQ looks on my trading DOM, and you'll notice each one of those ticks is about $6. That's the full sized, and you'll notice take a good look. That's auto center. You have to keep it on auto center unless the price won't even stay on your dome. But right there, that is the situation. It is extremely volatile. It moves extremely fast. I don't really know many guys. There are many ladies and gentlemen that get in there and trade this horribly aggressively, meaning with big leverage, because it's just it's too volatile. However, you can go to the micro. And if you go to the micro, you can dial your leverage down to, say, $1 a point, 50 cents a point, and you can play and actually let price action work the way that it should. But something like this, I mean, you could realistically, we've been trading this on 15-second charts. It's not the worst time frame in the world, because you see the size of these ranges within that construct. But look at the price action. Every time that thing moves, $6, $6.25, $6.25, $6.25. Crazy stuff, guys. In any case, that's an interesting approach there. If you were looking to trade this thing right there, you got a 15-second trade. You're in oversold territory there. You could be looking to take a buy maybe on a crossover. But I have to tell you, that's high risk. This market environment is not good. Is not good at all. Okay, what else do we want to talk about? Well, we wanted to hit on U.S. oil a little bit here today. I thought that it was an interesting move. What we saw, we're off about 3.16%, and a lot of people have said, Shane, why did crude oil plunge? Why did crude oil plunge? Why did it plunge? And I said, well, there's a couple of reasons for it. The number one reason was we had rollover. You saw your U.S. oil CFD actually rolled from the February to March contract. The price of crude oil has been I would say, a little bit less than what the U.S. oil contract has shown. And that's been because we've been trading the March futures contract for the last several days. So you always got to be ready for rollover. Understand rollover if you're trading crude oil. As far as what we have here on the monthly, I would really want everybody to be fixated here. I know I am. I'm on the futures market. I'm watching last year's high very closely. And you can see right there, what was 2024's high for the March contract now? U.S. oil is going to be different, but for the March contract, 69.48. And what do we got right there? 69.39, I think, or excuse me, 79.39. This could be a big-time breakout above that high. We're starting to see the market really load up. If that does happen, you're going to see a major break above last year's high. Now, what has happened is the sellers have dug in right in front of that long-term technical, and you're starting to see a little bit of bearish price action creep in to the U.S. oil market. Now, as far as I'm concerned, if you do look at the U.S. oil CFD, which a lot of you do trade, what do you got right there? 62%, 79. That was an interesting sell. Did it work? Not really. 80.73 was sort of the top of this range thus far in January. But let's go ahead and take this down to our daily, and you can see exactly what's sort of developing now. We had a sell-off beneath yesterday's low, which was pretty ugly, and you're off about 3.3%. So the real question is it time to buy WTI crude, or is it time to sell it? And my answer is very simple. It's sort of in flux. If you want to send them deep, if you want to go long right now and you want to send them from 77.75, do it. Take it. I don't really have a problem with that. Just be sure you stop yourself out. And the way that I would do that is I would go right down to my 30-minute chart, take a good look at the U.S. session schematics, something like this. Huge volume, really huge volume there at 9:30 a.m., really crazy. And then what do you got here? It looks like our bottom's probably in for today. You've got about another hour of a premium WTI crude oil trading. And, do you want it or don't you? It's tough. If you want it, you take it right now. Where's your stop loss at? You probably got a stop loss right beneath today's session low, early session low at 76.90. You'd have an opportunity maybe to trade down there. But as far as what I would be looking to do late in the day, it's really difficult. I mean, you can see the gap in your prices, right? That isn't because WTI just gapped down. It's because this U.S. oil CFD rolled over to the new front month. You've got to be absolutely aware of when rollover is. If you're trading a CFD like U.S. oil, somebody got caught long up here. You know it. And that's absolutely terrible. I would hate to see that out of anybody because that was not the price. That was not the price. WTI was not trading at $80.25. It was trading much lower than that. And you can see the big adjustment, the big flip, wiped out all the longs. You need to make sure that you know when rollover is. You need to know when your broker does stuff like this because that right there can destroy an account. It can, you got to sell your car to cover the margins. That's for sure. Let me see. Futures are awesome. Yeah, I trade futures, Hurst Horns. Let me see. T Marino, what ratio? That's tough. That's tough to say. I mean, you can trade whatever you want. I am a big fan of just going with your best. Get beat with your best pitch. Go to your best market, trade it aggressively, and see how you do. And your diversification, if you want to have other things on the periphery, that's great. Now, if you're a systems trader that has a set system and you execute every trade the exact same way, fantastic, number one. Number two, if that's the case, you can spread it across as many markets as you like. As a matter of fact, in order to understand if a system's worth a salt or if a strategy is good, typically it'll perform well across many asset classes. That's interesting. I would definitely if you have a strategy that works, trade it on everything and see what happens. Do some back testing research. See exactly what develops and how you can potentially have an opportunity to get after it on a lot of different markets because that's better than just trading one. So I hope that if you got one of those, then it's just a matter of time. Let me see. Let's go. If there's any other question, any other markets, I'm just sort of ranging right now. I'm looking around. I don't see a tremendous amount. If you wanted a great entry right here on U.S. oil, probably late day, then you're going to dig in and do something like this. 30-minute chart, you're going to be looking to bid price 77.15s, 78% of this range right here. And that bet right there will sort of put your back against the bottom of the day and maybe give you an opportunity to scalp maybe 10, 15 ticks, something like that. Be very careful, though. Let me see. I will try that. All right, Team Marina, absolutely. All right, let's see. I had a question. JC asked me about the Euro UAD or Euro Australian dollar. Let's just go ahead and take a look at a few of the markets you guys want to look at here for the last few minutes. Been an interesting trading day, no question about it. That's flat. 30-minute chart. That's really tough. Let's go right down to let's go to a 4-hour here. Euro Aussie. I would be careful betting against the Aussie right now just because of where gold is. If gold does, in fact, break above last month's high, I sort of expect a washout and some bidders to enter. I just don't necessarily know how high we're going. So if, in fact, gold does break high, it's going to drag the Aussie with it, which would be a bearish market driver here. You can see on the 4-hour chart, you've got a pretty darn good support zone right there at 160, 165.56, and that area right there has been decent. It's been decent. It's held up a few times, taking a little bit of a draw, but there's been some points to be had. That would be my key level for short-term trading, the Euro Aussie right here. As far as, what else we have cooking here, let's go back down to that dollar yen. We're still holding right around break even, I would say, down a few ticks. Been interesting. It hasn't been great trading by any stretch of the imagination. This one got us into the market right down there, and then we sort of bounced back up to about 155.51. So, this trade did go positive by about 26 pips, but we're looking for bigger fish. We want to see this thing trade up to about 89, somewhere in there, something like that. I've seen worse trades. We'll see. Market structure is not too bad. I would be very surprised if we don't trade up. Something to think about there. Interesting stuff. All right, everybody. Just sort of a quick around the horn. We've just seen really lackluster trading from a lot of assets today, a lot of flat stuff. The yen definitely was a big mover. But as far as looking around the horn, I fear that we missed the boat on Bitcoin. We were very close to getting that bid in there, and we just haven't had much going on. And right there, that was our bid, I think. That weekly pullback right around that 85,975, and our low just went to 89. Now we're up another 10,000, and guess what level's back in play? 100,000. There was a story out earlier today, and it seems like they come out every single day on a new strategic crypto reserve. And it's all coming out of the Trump administration. There's just no way to say it's not bullish for crypto. Let me see. Dragon. Okay, Dragon. Great Britain pound, Japanese yen, 4-hour chart. All right, let's look at it. All right. Moving down a little bit. Yen's looking pretty good. We just missed the entry on this trade. Really frustrating the other day. Very frustrating, but that's okay. There'll be more. Okay, 4 hours. So what do you really have here? Just off the top of your head, if you were just a sort of a novice, I don't want that. If you were a novice trader and didn't really know much about anything, you could do a couple of things. Number one, you could build a channel, something like that. Say, okay, clearly we're trending down on the 4 hour. A lot of people use left trend lines. I don't know. I'm not too big on them, but they can work. People use them. Something like that. It's not the prettiest channel in the world. For me, if I'm looking at this price action saying, okay, how do I want to trade it? It's going to be tough on the 4 hour because we're flat. We're flat. So when I see something like this where we clearly have a bearish move, we really like that opportunity to sell. I just didn't quite get it right up in here. We had to sell. My point is this. We're down big. You can see that we can't really use Fibonacci's here to get us short because why? You sort of traded inside of this bar. It's real choppy. It's flat. That's a textbook way to lose money using Fibbies. But if, in fact, you want to go to a daily chart, now you can start really looking at potentially what you could do to join the trend, maybe right from this top right up in here down to this low. Potentially, you may be able to sell 191s and get with the program there. It's not the worst trade I've ever seen. It's not the best one either. What I would be tempted to do here is on 4 hours flat, it's absolutely choppy. What I would be tempted to do is really go into your deep macros, your macro look at your macro levels, and what macro basically I'm referring to as long-term levels. So there's your spike low back on the low of December. That low down there is about 188.08, so we're still a few ticks off of that, but I wouldn't be surprised to see bidders step in and defend that zone. Could definitely happen. And then if you wanted to do one better, you could certainly do something like this. Monthly chart, what's going on? Well, that's also December's low. I would be very cognizant of this level right here. As far as bidding, do we want to bid or do we want to sell? It's just really tough. It seems like the world's ending right now in the guppy, but it really isn't. We're just very, very tight as we have been for about the past 4 months. This zone right down in here, 62% could be big. Down here, 78, those could be decent bids. We just have to wait and see. Right now, though, the heat is on. The heat's on to the bear, and it all comes from, everybody expecting the BOJ maybe to do something next week. All right, everybody, that's a wrap. It's been a disappointing Thursday trading session. I'm sort of watching those Japanese yen futures closely. We just traded up near the intraday high, and now we've come off significantly. So I don't know. You could probably play rotation strategies from there. Personally, I think that we have an opportunity here, potentially to grab a pretty darn good trade. A pretty darn good trade on that dollar yen, and it's already live. We bought quarters. We'll see exactly where this thing ends up. Right now we're trading about 155.30, and so we're up a few ticks there. We just got to wait and see what develops. All right, everybody. Fantastic. Let me see. All right, Team Marina, one more. Let me see. Shane, can we look at the Ether? Yeah, let's look at Ether. Why not? Absolutely, Dragon. You're welcome. Well, Ethereum, I mean, we were sort of spot on here. 2024's high. Where was that at? Right up there, somewhere around 40.95, somewhere in that vicinity. Let's see. Yeah, somewhere up there. We outlined this quite a long time ago, so let's go ahead and get rid of that old analysis. What can we say about Ether? Well, I mean, clearly everybody's bidding. Crypto right now, still very strong. We saw a bit of a pullback, but you're seeing the doji, and now the tide's sort of turning. And when the tide's turning, it means it could be time for us to trade. Let's go right here to a weekly chart. What do we have? Sort of a doji week, so relatively flat. What do we want to do? What do we want to get accomplished here? It's tough not to be bullish crypto. The real question is, where can we get good trade location? Spike low right there. Pull back to 62%. That one's already gone. How do you trade it? It's hard right now. It really is hard to find a long side. I'd rather make my mistakes to the long. Just remember that we're sort of flatlining on the monthly and the weekly. Are we getting ready to break to the bull? Well, the trade's sort of over, 32.62.2. That was a nice little scalp. Excuse me, yeah, 62. That's weird. 33.22. So, I mean, we got about a $100 bounce there, something like that, $60 bounce. I'll be watching this relatively closely. If you get a deeper pullback, maybe down there to 31.30, you could definitely get it, and you may be able to get something like a 30, 37. I'm buying dips. Long story short, I'm buying dips. I'm buying dips in Ether. All right, everybody, I'm going to go ahead and sign off for a while. We'll be back tomorrow with the last webcast of the week. Giving out the sauce, Michael Castillo. Thank you. Good to see you. Welcome one and all. Tell all your friends. And if you have any questions, be sure to cruise by How to Trade. Send me a private message. I'll be sure to get back to you as best I can. And if I don't know, I'll tell you. Remember, we've got a new YouTube video dropping on tomorrow on our How to Trade YouTube channel. It's called The Opening Range Breakout Strategy. So if you want to trade opening range breakouts, go ahead and give it a shot. We'll show you how to do it in a very, very easy fashion. Mark Orb, good to see you. Lita, everybody. All right, thanks, everybody. I'm going to sign off for now. Have a fantastic trading session. Trade the action well, and we'll talk soon. See you.